This market broke higher. Bitcoin wiped out over $700 million in shorts. The S&P hit all-time highs. Small caps just ran their best streak versus the S&P in 34 years. And somehow, nobody feels good about it. Not the bulls, not the bears, just a shared sense that something's off. That's not confusion. That's the state where price moves faster than belief can catch up. And that gap is where most people get left behind. This didn't happen in a vacuum. Over the same window, Trump publicly questioned Jerome Powell. DOJ investigation noise surfaced around the Fed. Former Fed chairs had to defend central bank independence. Political pressure on monetary policy moved from background noise to front-page tension. And when political risk rises while markets push higher, that's not strength, that's liquidity moving ahead of belief. Because liquidity doesn't need a story, it just needs uncertainty. Let's anchor this in facts. Early this week, Bitcoin broke above the $93,000 to $94,000 range after months of compression. More than $700 million in short liquidations followed within days. Coinbase spot premium turned positive again, buyers not leverage. At the same time, ETF flows whipsawed. One day plus $800 million inflow. Next day minus $300 million outflow. No steady trend, just pressure. Meanwhile, in equities, the S&P printed new all-time highs. Small caps logged their longest outperformance streak versus the S&P since 1990, yet the VIX rose instead of falling. Price up, volatility up, that shouldn't happen together, but it is. Normally, when markets push higher, belief follows. Participation expands. Confidence grows. That didn't happen. Instead, language shifted across desks, chats, feeds. I know it's bullish, but this doesn't feel like the real move. I don't like the risk-reward here. Price was saying go. Belief was saying wait. That split is rare and deeply uncomfortable. Here's what makes this phase dangerous to misread. These things normally don't live together. Heavy short liquidations, thin volume follow-through, rising volatility, bearish sentiment still dominant. Yet all four are present. Active traders declined. Retail stayed sidelined. Positioning stayed cautious, which means this move wasn't powered by excitement. It was powered by pressure. This is where most people get it wrong. They see ETF outflows, rising volatility, no clean pullbacks, and conclude this must be a bear market rally. But the data doesn't show clean distribution either. No sustained ETF exits, no supply expansion from miners, no broad profit-taking behavior. Instead, corporations bought around 260,000 Bitcoin in 6 months. Miners produced around 82,000 Bitcoin in the same period. Supply tightened while belief weakened. That's not distribution. That's a few believing strongly, while the majority still hesitates. This isn't euphoria. Euphoria has volume. Euphoria has consensus. Euphoria has stories everyone agrees on. This also isn't panic. Panic has exits. Panic has forced selling. Panic has fear alignment. This is conflicted belief. Price moved first. Belief lagged. And the data proves it. Behaviorally, traders acknowledge the direction, but refuse to upgrade conviction and demand cleaner structure that never arrives. They aren't wrong. They're uncomfortable, because this phase doesn't reward chasing, waiting for perfect entries, linear confirmation. It rewards one thing only: being positioned before belief feels comfortable. Downside would feel easier. A pullback would validate patience. A flush would reward caution, but instead, price keeps grinding higher. Liquidations keep firing. participation stays muted. That's why upside feels heavier than downside right now. Not because it's dangerous, but because it exposes hesitation. This week wasn't about indicators, not CPI decimals, not ETF net flows. It was about tolerance. How much ambiguity can you sit with before you demand a reason? Because the market didn't give reasons. It gave movement. If you feel frozen, you're not missing information. You're not early. You're not late. You're in the gap where price already moved and belief hasn't caught up yet. The data confirms that gap exists. But here's what most people miss. Waiting feels neutral. It feels like discipline. But in this phase, waiting has a cost. Not because you're missing gains, but because the longer you wait for belief to feel comfortable, the more liquidity has already decided without you. What you do with that discomfort is not the market's problem. This episode isn't telling you to buy or sell. It's showing you a market where liquidity moved first and belief stayed behind. That state doesn't last forever. And when conviction finally shows up, it won't announce itself politely. That's the state. That's all.